When you look at the news headlines, no matter what country you're in, right now everybody is cautious and not celebrating. To me, that's a sign that we're going to continue to ratchet higher, that the pain trade's going to be on the upside. It's going to be really, really painful because none of us really know why the market's going up or why it continues to grow up with our growth metrics not keeping up with it. But that's the thing. We're not celebrating yet. People are far too cautious.
Okay, do you read much into this insider data?
Well, I don't doubt the data. I just think it just adds fuel to the fire that a lot of people are cautious, and that's what makes the market continue to ratchet higher because just think of it, people have been very negative. Correlations have dropped, volatility has dropped. Nobody can believe that the S&P 500 is back at 1,500 on what? I mean, earnings valuations are about 14 times. That's about fair. But to go higher, people are just scratching their head and say, why? The metrics have to catch up. And I do believe that. But I think to the point of what you were asking is that so many people are cautious. To me, that's like a contrary indicator.
Okay, so technically, would you say the market's overextended right now?
Technically, I think the market is definitely overextended. The growth metrics have not caught up to where the market is, but that's typical. I mean, markets always tend to go way before the headlines or the calculus say they should. And this is just another example. I mean, I wouldn't be surprised if we just muddle along here in the 1,500 area for the next 3 or 4 months until something becomes clear for us to make our next leg upward or downward.
Okay, so you're not expecting a big pullback, but you're not expecting the gains to continue like they have been either.
That's exactly correct. I mean, I think everybody behind me is waiting for a 3 to 5% correction in the S&P 500 for no reason whatsoever. That's, to me, that's fuel to the fire why we won't have it. On the other hand, I don't think we're going to go anywhere fast. And the measure of that for me is really the volatility of all asset classes, not just the S&P 500, but you look at foreign currency, gold, oil. All asset class volatility remains tremendously low right now, a sign to me that we're just going to stay put for a while.
Hi, Larry. It's George Lucas here. You were talking about the negativity. Yeah. Does that mean, have you seen also the fund inflow slow down in the US mutual fund sector, or does that continue to be making records over there?
You know, it is continuing to make records, but George, to your point, I mean, these inflows have been pent up for a very, very long time. And so we're seeing inflows in both money markets and the stock market, people grabbing on the treasuries, credit, however you want to look at it. So it's been pent up for a while. Again, I'm not sure that's a great indicator, at least for me personally, of which way the market's going to go, because it's hard to estimate how long and far and deep that's been pent up for.
Yeah, Larry, you're kind of heading into a bit of a news vacuum over there, aren't you? What do you think is going to be the next big event for markets? It's going to be the Italian election?
I hope not. I hope that goes smoothly. I mean, I think there are definitely some outlier risks associated to the Italian elections. But clearly, I think that the next big event is going to be growth-oriented. I mean, it's something that I talked about a few minutes ago. Our metrics have to catch up, and right now we're kind of kneeling along in the U.S. and in Europe as well. We need to see something game-changing to prove to us that, yeah, in fact, we are moving in the right direction.
Markets still have to face this sequestry, and it feels like no one is taking any notice of the risks around this anymore. Has the market been conditioned to 11th hour resolutions?
You know, that's a really good point, and I think, you know, at least from Americans' perspective, I'm just astonished how that's being priced into the market, that we're just assuming that it's going to be an 11th hour resolution. It doesn't seem like it's not on the front page of the paper, it's on the back page of the paper. No one seems to be concerned about it, and to your point, it could end up being a very large problem, a large headwind for the market if something should go awry.
Yeah, and you talked about growth being the next sort of area of concern or focus for the markets, but we did see a little bit of a shake-up in Europe yesterday. I guess the pullback, a bit of a reminder of what happens when sparks fly in Europe. Are you wary of any more shocks from that financial system?
Oh, yeah, obviously so, and I'm hedged appropriately and accordingly. But with that said, I think a lot of that right now because we're so nervous and cautious and reluctant to make a decision, I think a lot of the risk right now is headline risk. And with that said, I mean, Europe has to figure out Cyprus. It seems like they're overlooking that. Spain. Will Ireland be the first one to get help from the OMT? I mean, there's a lot of things that we can worry about. But right now, it seems like it's headline risk more than anything fundamental or conventional.
Hi, Larry. It's George here again. I just wondered, do you think that pullback yesterday was really more just the markets looking for any excuse to pull back and they just latched on what happened in Europe rather than actually there being real concerns about what's happening in Europe?
Yeah, George, that's a good point because, here in America, we're all scratching our head and say, why in the world did we pull? We all know why we pulled back yesterday because the market just does that for any reason or no reason at all. But why are we ratcheting higher, making up all the loss from yesterday today on an inline PMI number, an inline ISM number in the U.S.? The earnings were okay, but nothing great. I think it's to the point where no news is construed as being good news for the market. And as long as there's no news, we'll continue to ratchet higher.
Okay, I can actually just see some news across my screen, Larry. The S&P 500 hitting a fresh 5-year high there, which is pretty incredible. Wow. Considering where you guys were a year or so ago. Just looking forward in terms of the economic data coming out in the United States over the next couple of weeks. What are you looking for there and where's your focus?
My focus is anything that has to do with growth, and whether it be PMIs, and we had the non-manufacturing ISM that came out today, but I think those will be the big drivers. And lately they've been coming out marginally in line, but I think we did have a hurricane effect. We also had a big cutback in defense spending, so we're seeing like an abnormality in these numbers. But going forward, that's what I'm focused on, and actually focused on PMIs around the world because we're so correlated to global growth, and that's where we need to find the demand in emerging markets, whatever it happens to be. So it's the PMI numbers and also the GDP that I'm most focused on.